Okay, so what we're going to talk about today is a little bit about Spaceship, a little bit about superannuation. I'm just getting used to hearing my voice over the speaker. So my name is Paul Bennetts. I started my career at Goldman Sachs, spent 5 years there, and then went into a portfolio manager role at a family office where we were managing $400 million. And then I met Daniel Petrie and Craig Blair when they were first doing Airtree Ventures. So we launched a $60 million VC fund, and over the next 3 years we invested that into a whole bunch of startups and late-stage technology companies. And then last year we raised $250 million to do our second fund, which was one part was Fund 2, which was a $125 million fund, and the second part was a sort of follow-on fund. Then I left that. I'm now a venture partner at Airtree Ventures to do Spaceship. So what Spaceship is a tech-focused superannuation fund that's fully diversified. We focus on folks that have time horizons of 20 years or more, right? So I'm 35 years old. I want to work for the next 30 years, and then I want to retire. The sad thing is most people don't know what it means to retire. So if I'm on $100,000 a year now, what does it mean to be on $100,000 a year when I'm 65? How much do I actually need to save between now and then? Most people can't answer that. Most people can't answer how much money they actually need to retire. So do I need $2 million? Do I need $3 million? Do I need $1 million? And then, what blows me away is we have this superannuation system where if I'm on $100,000 a year, I'm putting $9,500 into a fund that's somewhere, run by someone doing something. I have no idea what they're doing. And it's going to be my most important financial decision I make this year. $9.5 grand is a lot of money. So what am I doing with it? And is that enough to retire with? I don't even know. I'm going to wake up at the end of the year and think, do I give myself a pat on the back or do I freak out? Because you're slowly making your way towards retirement. So that's kind of like the overview of what Spaceship is. But I don't want to kind of just sit here and just sell Spaceship to you the entire 30 minutes. What I want to do is just take a step back and talk about some really cool stuff that you may not know about. So the title of the talk is Fintech, Tech, Society, and a Case Study in Superannuation. I'm a bit of a history buff, so I'm going to start with a quote that I think is pretty cool given I was pouring through Pause's marketing material and watching their super cool videos. I thought this applied somewhat to what we're all here for. This quote is from an artist called Holly. He was part of a German art school called Bauhaus. It came out in the 1920s. And that school came about because essentially what happened is there was this period of mass production coming through society. And they're trying to understand how to deal with that. Do you know what I mean? So you had the Industrial Revolution and you had this thing called urbanization and they were trying to figure out, hey, these buildings with all this ornamentation and this chair with all this ornamentation all over it doesn't quite work anymore. Yeah, we can't really handcraft stuff anymore. We've got to make products for a big population. So this school thought a lot about that, and there kind of was a bunch of artists that came together to figure out how design and art could be applied to technology, could be applied to mass production. So here's a quote from him. He says, "The reality of our century is technology, the invention, construction, and maintenance of machines. To be a user of machines is to be of the spirit of this century. Everyone is equal before the machine. I can use it, so can you. It can crush me. The same can happen to you. There's no tradition in technology, no class consciousness. Everyone can be the machine's master or its slave." I thought that was a super interesting quote to think about what is technology. Anyone can learn technology here. Anyone can apply technology. Anyone can differentiate themselves with technology. And that's whether you're a citizen, a company, or a society. We have this gift of technology. And how's technology currently being used by society? The sad fact is technology is being used just for consumption. So we've kind of been given this gift, and how are we using it? We have this production-consumption cycle, which is society. So every product we create is kind of for consumption. And not for savings, right? So what does that mean? The only way to kind of understand any concept is to use contrast, right? So you've got to kind of look, well, black or white, contrast that idea. The reason I've put before the 5-day work week, does anyone know when the 5-day work week was invented? Yes, all right, awesome. Oh, there's one person. There's always one smarty pants in the audience. So it was invented by a guy called Henry Ford. I think he invented it in 1920-something. No, I think 1926. That's what I thought. So think about that. So the world as we know it, really, modern day society, living in these cities, is really only about 100 years old. It's not very long. So what did it look like beforehand? Yeah, and as I take you through this presentation, just keep thinking back. If you can take away anything from today, just keep thinking. The whole point of my career is I'm going to work 30 years so I can not work for 30 years, right? So I want to work 30 years to not work 30 years in retirement. So I need to understand how that works. Now we have a bunch of systems in place. One's superannuation, but what happened before the 5-day work week? What was that like? Does anyone know how people lived? Anyone know how they saved? How much they consumed? Do they pay for a house? Did they rent their entire lives? Did they retire when they were 65? Or did they retire when they literally fell over and passed away? So I'm going to take you through a little bit more about what's come before us. And you'll just have to forgive me a little bit because I've got to look at my notes to figure out what actually happened. The idea of super was that previously what happened was the burden of looking after your retirement was on companies, right? So, only in the mid-1800s did this idea of, hey, you had workers who were doing, 100-hour weeks at factories, if you can think about that. Around about 1890, they started actually recording how many hours a typical worker worked. And in the first year of 1890 of that index, it was 100 hours on average. So I worked at Goldman's in my early 20s. I worked 100 hours a week. That's not fun. So what does 100 hours look like? To me, it was 9 a.m. till 2 a.m. Monday to Thursday, 9 a.m. till 6 p.m. on Friday, and then a full day on Sunday. So usually you'd have one day off. So that's a pretty tough existence, yeah? So what they did was they said, how about we get the companies who are kind of employing all these workers to look after your retirement. Now the good thing is, back then they had this thing called a trusted employer-employee relationship, where the employer didn't have that much competition to deal with, right? So, and they also had pretty, they didn't have this issue of globalization that we have now. So you had these kind of very natural geographic boundaries. So you could have, big companies in every single country. And it was much easier to kind of look after your workforce. So you could kind of, train you over time. You could start at the bottom of the ladder and slowly move up. And across your career, you probably had 1 to 2 jobs, right? Roll that forward to today, and we have globalization. So we're, someone's competing for your job in India, all these European countries. If I was a developer, I would not be competing with people in Sydney where I live. I would be competing with anyone who can plug into the cloud across the globe. And because, it's an age-old story, we've got different costs of living around the world, so someone can actually price themselves a lot lower. I invested in a business called Design Crowd as part of Airtree Ventures. Its business model is based on outsourcing design to creatives, and you'd run design contests to come up with a logo. What you see there is that most of the logo design is not actually done inside of Australia. It's all done in all these other countries around the world, and it's kind of fed into here. So all those jobs are now sort of global in nature. So my dad had 2 jobs. My friends have had 3 jobs by the time they're 30. And it's not the employer's fault, because it's just way too competitive to sit there and try and keep training you. I can't afford to train you. So what I'll do is I'll fire you and I'll hire the expertise in. It's much easier to do it. So what they found was that the companies couldn't afford to kind of keep you on the books and pay for your retirement. And then that kind of rolled forward until the 90s when our government kind of thought it through, well, wow, if companies aren't going to pay for it, then I guess we all have to pay for it. And if it's all of us, it's our tax money. And I don't think anyone really kind of want to pay for the other person, really. I mean, we're more capitalists than socialists, I guess. So they put in this system of forced saving. They said, well, we've got to force the population to save. And it started at 6.5% of your salary. It's now 9.5% of your salary. In 2025, it's going to be 12% of your salary. So it's all kind of moving in one direction. There's a reason for that. It's because we're consuming probably too much. Yeah. When we talked about before that technology has been applied to consumption and not savings and investment, a good example of that is the Sugar Fix, which is a credit card that came out in 1958. So 100 years ago, you couldn't buy something on credit, yeah? So think about how that would change the way you would kind of make decisions. If you couldn't easily, fund your weekend with a credit card and you actually had to sit there and, well, hang on, before I buy this lamp for $400 from my local design store, I actually have to sit there and save up for that money rather than pay it off. It's a small kind of delta in thinking, but apply it to houses as well. So in Australia, you can get a house with a 10% deposit. Imagine if that was a 20% deposit or a 30% deposit. How would that change how you do things? It just takes longer before you can consume. Another country called China, they have the opposite. So they're a country of savers. Yeah, so they're saving 30-40% of their household income. What does that mean? So one of them's got it wrong. Someone's doing it wrong. Someone's going to wake up in 30 years from now and go, ooh, I made a mistake. I'm not sure. Maybe we have it right. I don't know. So, but I think the sad fact is, if I asked anyone in this room, how much are you going to have when you're 65 years old to retire? Is it 2 million or 3 million? You won't be able to tell me. So if you don't know that, that's the first kind of alarm bell, right? You should try and figure that out. So. This is this idea of, I've got to rush through this because I'm running out of time already. Fintech really hasn't helped, right? So we have all this wonderful technology. We can operationalize data better and better every year, but it's not really helping you guys. So, what blows me away is superannuation funds. They know how much income you make. They know what job you have. They know how long you've had that job for, but yet they don't tell you how each year, whether you're getting closer or further away than what you want for your retirement, right? It should be a pretty easy thing to do. You'd log in and you go, hey, you should be saving 20 grand a year, but you only save 10 grand a year this year. You need to fix that up. Do you know what I mean? Like that feels like an obvious thing. The data that a superannuation fund has on a customer is actually more than a bank, because a transaction account just has a dumb nominal amount that goes in there each month. They don't really understand anything about it. We as a superannuation fund know your profession. We know how long you've been there for. We know where you live. We know lots. We have this wonderful contextual data piece about you. Let me spend a few more minutes talking about superannuation. There's a guy called Mike Cannon-Brookes. You may have heard of him. He started a business called Atlassian. It's now worth over $5 billion and it's listed on the NASDAQ. Do you guys know who Mike is? Yeah. Okay, cool. He said last year that your super is invested as if you're retiring 5 years from now. What does he mean by that? What's kind of happened in super is that the majority of funds have invested all of our super in BHP and the big four banks, all these Australian companies. Why is that? I don't know. Safe, okay. So BHP's profit halved in the last 10 years. Yeah. These big four banks, they make about 50% of their earnings based on a residential market in this country. Apparently everyone else in the world says we're idiots for how much we pay for our property. Someone's right, someone's wrong. I don't know. We have lots of people moving to this country, particularly as developers, because I come from the sort of startup ecosystem, so I talk to lots of engineers. They come in here and they say, Paul, I'm earning income in your country. I'm from South America. That was the last conversation I had. I'm from Brazil, right? Brazil has wonderful companies. Why is it that I can only get your companies? But I'm a global citizen. Why do we have these geographic boundaries? ANZ, do you know where all its operations are? It's not just Australia. It's New Zealand. It's Southeast Asia. It's all over the place, right? I think this idea of a majority Australian portfolio just doesn't make sense. The other thing is our generation is seeing technology completely immerse itself across society. So we were born with the internet. We've seen the 5 most valuable companies in the world all become technology companies. Why does that happen? Well, it happens because technology has immersed itself across society. Locally, we've seen that company called Atlassian, started by Mike Cannon-Brookes 10 years ago, and it's now bigger than our national airline. Who missed that? That happened in the last 10 years. Something happened. It's now bigger than Qantas. But the sad fact is it's listed on NASDAQ. So you've got a wonderful Australian company that's going to have a beautiful sort of 10, 15-year growth curve ahead of it, but it's not in anyone's super. That's an Australian company. What's happened? So the other thing that blows me away about super is, and this is my rant slide, they started doing these TV ads about 10 years ago, and you see these 2 super funds, and they're both sort of growing at the same rate. But the one with the slightly less fees would kind of grow more. Now, they've tricked you with something there, is that they're assuming that all super funds have the same performance. Where in any other financial market, where in any other investment management product, does the guy who's selling you the product say, my performance is exactly the same as everyone else's? That's bananas. That's crazy, right? So they've built a fee narrative to say, hey, don't think about performance, don't think about portfolio makeup, just think about fees, right? The problem is, and if I ask anyone in this room, what is your biggest holding in your super that you're relying on to get to retirement? And everyone gives me that look. It's like, oh, fuck, I should probably know that. You know what I mean? What are my top 5 companies? Well, I've told you, but assuming that you don't know. So that's a bit alarming. And the other thing is, just to really drill this home, our generation is seeing these companies every day, these technology companies. So I use Snapchat every hour. I probably shouldn't. I go home to Netflix every night. On the weekend, I'm in Ubers. And when I go on holiday, I use Airbnb. So it's not a huge leap for us to kind of go, hey, technology is clearly spreading through society. Why isn't it spreading through my super, right? So that's the kind of idea of what our view of superannuation is. And the purpose of this talk is to give you a whole bunch of tidbits just to kind of think differently about how things are. I think the biggest fail in fintech is not thinking about not just the consumption side of the balance sheet, but the savings and investment side, right? So superannuation is a savings and investment product, right? Savings, how much do I need to save each year? How much do I need in retirement? And investments. What portfolio of assets will be the right portfolio of assets for my retirement? Yeah. The other thing people generally get worried about is when we say we're about tech, they either say, Paul's going to buy 5 tech stocks. We're not that. We're a diversified portfolio with tech at its core. So we've got 30 tech companies in the core of the portfolio, which is 35%, and a full diversification around it. Now, the reason I say that is, here's another thing which isn't a pitch on Spaceship, but it's an idea that everyone misses when they think about superannuation and financial services, is that people say, well, what about the dot-com bubble? What's going to happen? That's going to happen next year, isn't it? Or 2 years from now? We're going through business cycles. What people don't realise is that you probably have $40,000 worth of super right now, right? And you've got 30 more years of making income. It's safe to say that you're probably going to earn hundreds of thousands of dollars of money to put into super over the next decades, right? So what does that mean? Does that mean you're buying more stocks or selling more stocks over the next 30 years? Well, you're buying more stocks. Every year you're averaging in, right? So if you're averaging in every year, what do you actually want from the financial markets? What's better for you? Prices going up, up and up, or prices going down? Yeah? So business cycles are actually a good thing, because every year it's going down, it's actually good because you're going to be buying more in the future. So the key sentence to remember is you're a net buyer of securities over your life. If you're a net buyer of securities over your life, you should not worry about business cycles. You should worry about high quality companies that can perform over decades to build you wealth, right? And then people say, what about when you turn 65, Paul? Don't you worry about what financial markets are doing then? Well, no, because then you become a net seller of securities over 30 years, right? No one just wakes up when they're 65 and go, I'm going to sell everything and take it out of my super. What they do is they gradually manage out of super, yeah? So you shouldn't be as concerned about what's happening with financial markets. What you should be more concerned about is, do I really believe in the competitive advantage and differentiation, defensibility of BHP and the big four banks over the next couple of decades? Do you know what I mean? Hopefully you don't think that much of them. If you're in this conference, you probably are a bit more forward thinking than that. That's a little bit about us more. I won't jump through that. I've already gone over time, so I'm just going to have to this final point is the idea of transparency. Everyone should be able to go home tonight, log into their superannuation account, and see how much BHP they actually own. So if you have $40,000 worth of super, I think it'd be wonderful if you could say, I've got $4,000 worth of BHP. I guarantee that you can't. For some reason, they don't want you to make it easy for you to see what's in their portfolio. I don't know. It's like the magician with his hat, you know. That should probably change. And that's kind of it for our talk. If you'd like to join up to our wait list, we're in beta right now, so we officially became a superannuation fund on the 9th of January. That's a non-trivial thing to do. There's only 200 of them in the country that manage $2 trillion worth of assets. The last one that launched in Australia was 3 years ago, and it was Virgin Super. It cost them $30 million to get up and running. We've done it with 2. We have an incredible set of investors behind us, including Mike Cannon-Brookes, a whole bunch of others. I won't go on about them. But if you want to check us out, just jump onto this link, sign up to our email address. You'll see much more about what we're doing. That was a very quick... So you know on YouTube where you can click 2 times and 3 times talking speed? I did 1.5. So thank you.